A very warm welcome to our webinar on Mastering the Art of Balancing Financial Statements on Caseware Working Paper, with a special focus today on notes to the financial statements and the balancing of cash flow. Today, we embark on a journey of learning and discovery, delving into the intricacies of financial reporting, guided by myself, Sandrine Permal, and none other than Angela van Tonder. Angela brings with her over a decade of invaluable experience as a technical IFRS content specialist. Her expertise has been honed through the years of dedicated work, particularly in the challenging realm of implementing complex accounting standards into robust financial reporting templates. Angela's journey has been one of innovation and perseverance. She has been at the forefront of teams tasked with pioneering the implementation of these intricate standards, ensuring seamless integration with or into widely used financial reporting frameworks. Her passion for IFRS is not only evident but infectious, as she aptly describes it as an exciting space. In the third part of this webinar today, Angela will be leading us through the balancing of cash flow statements, making sure that we understand how to use Caseware working paper to balance your cash flow. Make sure that you stay with us until the end to also hear our product manager for financial reporting, Ninka Kruger, who will guide us through on what will happen next with the series of Get Ahead webinars. As we embark on this webinar journey, guys, let us open our minds to absorb the wealth of knowledge Caseware Africa has to offer. Please engage, ask questions, seek clarity, for it is through this exchange of ideas that we truly enhance our understanding and get ahead with Caseware. As you know, all the attendees are currently, the microphones are muted, the cameras are turned off. This webinar is eligible for 1 hour CPD. So to earn your CPD, make sure that you stay for the full duration of the webinar. If you lose your signal, please exit and come back in and use, or you could also use the app rather than a browser. The recording will be made available by our marketing team in a week's time. Please look forward for the email. As mentioned, your engagement is crucial. Use the chat or the question panel to interact with us. We have added a little screenshot for you to guide you. And of course, we'll make sure to answer all your questions during the presentation, or if we don't have a chance, at the end of the presentation, we'll make sure to engage and answer all your questions. Before we move to the first slide, I'm going to launch a poll, making sure that you have all the materials. So please do answer that little poll. We're going to leave it open for 60 seconds. Do you have your course material downloaded? Yes, not yet. Course material will be the handouts that I have inserted in your in the handout section of your GoToWebinar. And we also have the Caseware working paper file that we will share with you as well. So please do engage with us and do let me know if you've been able to download. If not, I'm also going to share it in the chat box. Okay, I've inserted here in the chat box the link to download the Caseware working paper that we're going to use today If you don't have a chance to download it, please continue to use the Caseware working paper file that we have been using since the start of the series of webinars. Right, I'm going to close the poll. For those of you who have not yet downloaded anything, please refer to the handouts components, handout section of the GoToWebinar and the chat box. I have inserted all the items for you. Right. The next one, I'd like to hear whether you are a first year in your training contract, or you're a second final year, or you're a supervisor or a manager, or you're from an audit firm but not yet completed your training contract. Apologies, I said training contract, but it's contract, or any other. If you're a corporate, please select other. Right, very interesting. 30 more seconds for the poll. That's interesting. I'm so proud to see that we've got more first years in the room. So that session is made for you, but we will obviously not forget our supervisors and managers in the room, our second final years. We also have a lot of information to share with you. And if you're from a corporate, that is 100%, this session is made for you. We'll show you how to maximize your use of Caseware working paper. Thank you all for answering the polls. I'm now going to close the poll and move to one last actually, and quickly launch it. So we're interested to hear from you. How many other financial reporting with Caseware sessions have you attended so far? Have you attended to everything? Is it your first one, or have you attended only one, which is possible? So yeah, we are happy to hear from you. If it is your first one, I will be referring to the work we've done prior to this session. So please make sure that you download the Caseware working paper I've shared with the From Smash link, so that you can follow through with us. Okay, some 10 more seconds. Wow, more than 50% have attended all the training sessions. That's extremely interesting. And we've got some of you who are on their first session. So please make sure that you download everything from the chat box and from the handouts section of GoTo. All right, thank you everybody for participating. I'm now going to close the poll and go back to the screen to my slide where we want to introduce to you what are we going to achieve today. The first part of this session is around balancing your notes on Caseware working paper. A kind reminder, every hour we're going to have a 10 minutes break. After the break, we're going to go through the related party notes, and we're going to end the third part of the session with balancing cash flow with Angela, and the fourth part of the session will be with Ninka for the Q&A and the what's next. In terms of balancing a note, we're going to cover today the property, plant and equipment note. Sorry, I've inserted machinery here, should be written equipment. Intangible assets note, we're going to go through how to complete your deferred tax note, the taxation note, the revenue note, and the tax paid note. And before we move to property, plant and equipment, I'm going to escape this screen and go back to my main screen and look for Caseware working paper, you can double click on your Caseware working paper icon. Just give it a few moments to open. Then a polite reminder to everybody to open your Caseware file. You will go to the blue ribbon on the left-hand side of your screen, File Open. If you have downloaded the engagement file I shared with you, you can browse to your computer, go to your downloads folder, maybe you saved it there, and you can open your engagement file. On the other hand, for those who have already created wrap-up manufacturing, on my side, I've pinned it. I've used on the right-hand side that little pin button, so I'm going to double click to open wrap-up manufacturing. If you are opening the file that you have downloaded from me, use SUP as username and password SUP. Alternatively, if you have already created the file since day one, remember we created our username. Please log in with your username and press on enter to open your Caseware working paper file for Wrap-Up Manufacturing Limited. A polite reminder, we are preparing financial statements in this session for Wrap-Up Manufacturing Limited for 30th April 2023. To locate your financial statements, you will go to the third folder on your document manager called Financial Statements. Expand the folder. Go to your Financial Statements Preparation folder and the Case View document 0110. This is our Financial Statements IFRS. Double click to open the financial statements. Whilst it is loading on my side, I just want to quickly check out by raise of hands to all our attendees in the room. Have you been able to open and locate financial statements on Caseware working paper? Just raise your hand using your GoTo app. That will guide me in understanding whether you've been able to either download or open financial statements of Wrap-Up Manufacturing. Oh, thank you, Memory. Thank you, Wayne. Thank you, Tamai. Thank you, Rohan. I can see some hands raised. That's 100%. Thank you, Amare. Thank you, Amos, Anton, Andeline. What a beautiful name. Thank you, Tendi. Thank you, Abdur, Karen. And for those who didn't, please do let us know how we can help you. I'm going to leave the floor open for the next 2 minutes just to give you all time to open Caseware working paper Wrap-Up Manufacturing and open financial statements Case View document number 01.10. All right, Morgan, I can see that you don't have, I've seen your questions, that you don't have access to the chat box with the link. I'm going to share it again with you. All right, thank you, more blessing, more blessing. I share it with you. Thank you so much. Andeline as well. I hope that you've been able to receive. Thank you, Gugu, for your comment. You've been able to open everything. Thank you. 1 more minute, guys. Thank you, Roxanne, for the feedback. All right, thank you everybody for having played the game and raised your hands to indicate that you've been able to open wrap-up manufacturing financial statements. I'm now going to jump back to the presentation, and we're going to start with property, plant, and equipment. So one important aspect in completing your financial reporting will be to complete the reconciliation of property, plant, and equipment for current year and prior year on your Caseware working paper financial statements. If you do not complete the note, it will appear in red. The difference section, if you should follow my cursor, is going to appear in red, and the expectation is for you to use your fixed asset register to insert the different movements. As you insert the movements, this is what you'll see. It is a cleaner recon. The difference will be turned into blue, and all your movements will be inserted there. Now, the question that you might have will be, where do I get those movements? So if you're from an audit firm, you will need to ask your client for the fixed asset register. I've inserted a copy of a fixed asset register in the handout section. So it's an Excel spreadsheet, you can refer to it. Ask it to your client. If you are from a corporate perspective, you will then ask your finance team to provide you with that fixed asset register. It's crucial because you will not be able to get the figures out of the blues in terms of the movements for the different components of your property, plant, and equipment. So today, guys, we're going to do it together. I'm going to give you every time 3 minutes to use the different documents I've shared with you to complete the reconciliation. We're going to do only current year, but of course, you should be also doing the prior year one. Now, I'm going to escape this view to go back to my financial statements. I trust you still remember how to use the different components on financial statements, your case view document on Caseware, how to use the quick jumps. If you should follow my cursor, on the top of my screen, I've got the BS, which is a quick jump to balance sheet. So remember, our objective is to go to property, plant, and equipment node. So I'm going to select and click on BS to jump to my statement of financial position. To reconcile my PPE node, I will click on the node number 3. This is the number in red, which is found on the line property, plant, and equipment. And I will jump to the node property, plant, and equipment. If you scroll down a little bit, you will get to your reconciliation of property, plant, and equipment with all the differences appearing on the recon, and same will apply for 2022. So using the fixed asset register, which is found, I'm quickly going to open my fixed asset register. In the link that I've shared with you. So we are going to fill in the movements from the fixed asset register back to our case view document back to the reconciliation. Let's start with plant and machinery. We're starting with an opening balance for 2023 of 22 million. There is a difference of 1.2 million that we need to reconcile. So let's have a look at our fixed asset register. Please locate your plant and machinery components. Just giving you a few seconds to open your Excel. We have additions for the year. So by the way, guys, always remember to look at the titles of all your documents. So this is Wrap-Up Manufacturing Fixed Asset Register for the year ended 30th of April 2023. That's the correct document I should be in. Then look for the area where it says plant and machinery, the different movements for the year. We've got an addition of 1,381,838. So I'm going to insert it in the yellow cells. A polite reminder to everybody and for those joining us for the first time. In financial statements in Caseware, whatever is in a yellow cell will be editable. If it is in a white cell, it is not editable. If it is in blue, it means it doesn't print. If it is in black, it prints. And of course, even the reds will print. The reds indicate that you must correct, you must reconcile something. So that's what we're doing now. So I'm going to type in 1,381,838 as the movement for additions. As you insert your different items, your difference is also going to move. So let's continue back on the Excel spreadsheet. What else do we have for the current? When I say movement, it's movement during the year. So we're going to look for items that happen during the year. We've got the depreciation charge, the depreciation for the year of 2,637,420. So I'm going to insert the depreciation charge. If you scroll to the right, you should go to your depreciation charge. So here we go. Third line, insert negative 2,637,420. As you insert your figures, the blue items, the column is now in black, meaning the additions column, the depreciation column will now start to print. Then if you scroll back to the left, your difference should be nil, meaning that you have reconciled this particular line item. I'm going to do, it's currently 26 minutes to the hour. I'm going to give you 3 minutes. Please use your Excel file that I have shared and insert any movement for the year. It could be an addition, a disposal, a depreciation on disposal, or a depreciation charge for the year. Make sure that you scroll to the correct area to insert your movement. Right, guys? 3 minutes from now, it's going to be 29 minutes to the hour, and then I'll take you through quickly how to insert everything. Whilst I'm waiting, I'll go to the questions, just making sure that you've got all the assistance. And also, I'm going to lower all the hands raised, and as soon as you're done, you can use the raise hand option just to let us know that you were successful. Thank you, Timai. Thank you, Pense. Thank you, Luandri. I take it that you were able to complete your recon of PPE. Well done. So it's 29 minutes to the hour. I'm going to help you if you're not successful in completing the reconciliation of property, plant, and equipment. Again, we're going to refer to our fixed asset register to get to the movement of our furniture and fittings. So looking back here, furniture and fittings, there's no addition, there's no disposal. So I'm going to leave it blank on my financial statements. However, we have depreciation charge for the year of 4,054. So I'm going to go to the section, scroll to the right, to depreciation column, 4,054, negative. The objective is to have a difference which is nil. Motor vehicles, let's go and have a check for motor vehicles section. We've got a motor vehicle opening cost of 1.2 million, no addition or disposals. We've got a depreciation charge for the year of 60K. So I'm going to insert that on the depreciation charge column, 60,242. Moving on to office equipment. Back on my fixed asset register, let us look for office equipment. We've got two office equipments, alarm and office equipment with a total. There's no additions, no disposals, but a total depreciation charge of 4,606. So I'm going to go down here and look for negative 4,606. And by the way, everybody, you can also, a polite reminder, right-click over your cell, let's say office equipment, 17,951. You can also right-click over that cell and go for a trial balance drill down. The drill down will give you a list of all those account numbers with the balances that you have mapped to, in this instance, office equipment. It can help you understand your accumulated depreciation and the cost for the year, and help you as well reconcile back to your fixed asset register. For example, we've got office equipment costs for, let's look at the final period, 125,000, or let's look at the opening balance rather. 125,000 for office equipment, that is where this is. Your alarm, 16,487, this is what it is. For the cost perspective, it's the same for the current year. So in other words, it would mean there is no additions that have been processed for office equipment or even alarm, and that supports the fact that we don't have the additions on the fixed asset register. In terms of accumulated depreciation, let's look at the opening and the closing. So for office equipment, for example, we're starting with an opening accumulated depreciation of 109,000. This is where it is, 109,000, and a closing of 112, and a closing of 112. The difference being the depreciation charge that we have added on our reconciliation. Same will apply to alarm system, with an opening depreciation, accumulated depreciation of 13,738, a closing of 15,000, and the movement here will be the depreciation charge for the year. The total of it, 4,606. This is where we have inserted it on our notes. Going a little bit faster now that you've grasped this item, let's go to IT equipment. We've got an addition of 6,900, no disposal, and a depreciation charge of 80,000. So addition here of 6,900, this is going to be positive. You're adding to your fixed assets. And then depreciation charge and expense, negative 80,654. And we've reconciled it. Computer software, no addition, no disposal, depreciation charge of 11,303. So I'll go directly to depreciation column, 11,303. Leasehold improvements. What do we have for leasehold improvements? We have a total cost. It's actually an addition. Should have been here. Apologies for that, guys. Would have been an addition for the current year. So I'm going to put 136,559 as addition. That's the objective, where I'm going to zoom out a little bit just for you to see. That's the objective. We want to see the difference column turn out blue, meaning it's not going to print. If I quickly show you how to print preview, you can press on any cell on your reconciliation of PPE section, then press on your preview button or press on F4, just to give you an idea of how it is going to print. And now the reconciliation for 2023 is nicely reconciled with no red appearing. Of course, you can also use your fixed asset register to reconcile back to the main part of the note, to the top part of the note, whereby you have a total cost for the year. I'm going to quickly move that screen like this just to show you a cost for the year of 59,557,000. That is what we have here. an accumulated depreciation at the end of the year of 38,151,000 and a carrying amount of 21,405. So to get back to your figures, make sure that you ask your client for their fixed asset register. Okay. I'm going to close the print preview and go back to the financial statements. Now that we've reconciled it, you've seen one type of reconciliation format, that is, it's more horizontal. We also have the option to change the content, to change the format from horizontal to more vertical. I'm not going to do it with you guys. I'm just conscious of time. I will show you on my screen. You can follow through on my screen and try it on your side later on. If you scroll just a little bit up on your reconciliation of PPE note, you will see that little icon, like a trident icon. If you click on it, it is going to prompt you the alternate content dialog box. On the dialog box, you'll be able to select an alternate content. That means enter the type of content for your reconciliation note. The default one is the first one, where you have your PPE line item showing on a horizontal line. The one that I have selected on this slide is the second one. So to select an alternate content, you need to click on the radio button select, and you will also be able to preview the content. Make sure that you look whether this is aligned with what you're looking for. In the second alternative, here you've got your cost, your accumulated depreciation, your net book value at start, followed by all the different movements. Isn't it nice? Just a click of a button and you can change the format of your PPE reconciliation. Okay, that's I've added the slide here just to show you how beautiful it is going to be as soon as you've completed the reconciliation of PPE for current year and prior year. Okay. Talking about your intangible assets, you can also, if you wish, if you are on your financial statements, you can jump to your intangible assets note. It's note number 5, but we don't have any figures in our engagement file wrap-up manufacturing. So I'm not going to reconcile it because we don't have anything. The same concept will apply like PPE. You'll need to ask your clients for the movements and insert them into your yellow cells so that it reconciles your differences. Moving now to your deferred tax note. That's the third one that we're going to cover for today. In the deferred tax note, you will have a table of reconciliation of deferred tax asset or liability. Usually, your clients will also be giving you the different movements. They will be giving you their tax reconciliation, the deferred tax reconciliation, and you will then need to populate it onto your Caseware working paper. The objective will be to define the difference, which is appearing in red, and define difference. It is giving us at the moment for prior year 393,190. So you will need to ask or look at your recon from the clients and then insert the different movements. Please note as well that the descriptions on this reconciliation is in a yellow cell, meaning that you can modify the description as required, make it relevant to your clients. As soon as we're done with the reconciliation, this is what you will see on your screen. So the line which was previously in blue will start to print as soon as you insert the different movements. If you can kindly go to your statement of financial position, look for the deferred tax line item. I think it's note number 8. Click on the note number. I'm going to leave that window open for 2 more minutes and you can start feeding your reconciliation note as well. Insert it with those different figures and then I'll do it with you guys. Whilst you're doing it, I will go through the different questions. If I can, I'll answer them or else I'll connect with you individually. So 2 minutes from now to please fill in your deferred tax notes. So we've got a question from Kaylin in terms of the statement of changes in the equity, the statement in reserves. So we're not covering it today. However, just need to check whether we're covering it in the next sessions. Alternatively, if we're not, we will definitely connect with you, Kylene. Just let us have your email address and we'll share with you the different documentation. If you're lost, as you mentioned, in there, we'll definitely help you out. All right, if you're done with the deferred tax note, I'm going to escape from this slide and go back to my financial statements on Caseware. Remember, if you want to go faster on a note, you can either use the quick jumps, then select your note numbers. Alternatively, you can activate your View tab on your Case View ribbon on the top of your Case View document. Select Document Map. You can also scroll down and look for, in this example, deferred tax. Here we go, on the top of my screen, on the left-hand side, this is my deferred tax. We can click on the note using the document map if you prefer, and you will then jump to note number 8, and let's scroll down and let's start reconciling that particular note. So we're starting with, first of all, the reduction due to rate exchange for the current year. That was 208,501. This is a figure that we have obtained from the Recon of the client. He also mentioned about the taxable temporary difference movement on tangible assets. That's the difference between your depreciation charge and their charge for tax purposes. So it's 117,984. That's the current year, which is now balanced. And we are going to also to insert any movement for prior year to balance our prior year. It's 393,190. The objective is to get rid of all those red and define the differences so that it reconciles. Let's now move to the next portion, which is the taxation reconciliation, the taxation note. So here, same drill. We will need to ask the client the reconciliation of its tax expense. So you have two options here. Just need to show my pointer. You've got two options here for your reconciliation of tax expense. You could include the note using your accounting profit. So it's going to use here the values where you insert the values from your client recon. Remember, the yellow cells are modifiable, so you can also modify any of these descriptions to align it to your clients. Alternatively, there's also the option to include the note as applicable tax rate, where you are going to perform your reconciliation using percentages. The objective, once again, if we, for example, use the accounting profit, how do you say that? The accounting profit format, this is what you'll need to do. Insert your any tax adjustments on your taxable profits. So I'm going to do that with you, So if we go back to financial statements, where are you going to find your taxation note? Who can tell me in the chat box, what's the note number for taxation? Come on, the fastest one. I'm actually looking for the chat box or the questions. Anyone who wants to let me know how do I get to my taxation note? Okay. You don't have anyone today. Yes, Jose, thank you so much. So let me check out whether it's note 22. So to get it faster, we can go for taxation note. Let's go to income statements, 100%. Well done, Jose. It's note 22. So next to my taxation line on income statement, here we go. Yes, Roxanne, use the income statement shortcut, 100%. Well done. So that's the taxation note. And if we scroll down, you've got your reconciliation of tax expense, the different radio buttons, depending on how your clients want to reconcile and show the reconciliation of tax expense, whether it is the tax rate option or the accounting profit recon option. I'm going to select the accounting profit one because this is the example I've prepared for you. So we are going to insert here our non-deductible income of negative 190. The difference was negative 200, and this is how I'm going to insert it on my tax expense. If you're wondering where did I get that amount, this is a document that I received from the finance manager of Wrap-Up Manufacturing. They gave it to me. I've inserted it there. Okay, moving now to the next note, which will be your revenue note. Guys, we are doing this session really to show you all those notes that require your attention. We've seen PPE, intangible, we've seen deferred tax, taxation, we also have your revenue note. Remember what you've learned around IFRS 15, around your timing of revenue recognition at a point in time, over time. In your note, you can also insert those amounts, those not amounts, yeah, those amounts in the right category, and then using the once again using the data from your client. You need to ask the client for this type of information. So let's do that together. I'm going to insert only one line item for revenue. So I'm going to escape the slide, jump back to financial statements, select IS to jump to my revenue note. Note 14, that's your note for revenue. And let's scroll down to the timing of revenue recognition. Actually, I already did it for you. So that was only the point at a point in time, 111,646. In this example, we're going to assume we don't have any overtime amount. Please, you can close this one because remember, it's in black. It is going to print. So I'm going to close that, use that little close button so that it doesn't print and it appears nicely into my financial statements. All right, Mandy, I've seen your question. There's a question from Mandy. Your note does not balance and still has an undefined difference. So Mandy, I'm not sure which file you're using. Maybe you can guide me. Are you using the file that I have shared with you using the link I've shared from Smash? Or is it a file that you've created? It's just that we have remap some line items to make sure that you can reconcile. Your figures will be slightly different from what you had if you've prepared it since day one. So don't worry, you'll have time afterwards to download the engagement file that I have created in during the break. Okay, going back now to the slides, we're done with revenue, so we're moving to the tax paid note, which is another note that we have created that needs your attention with the undefined difference, where you need to reconcile your different movements. So if you use the slide that is on my screen, you can use the values there. It is also in your presentation slide to insert the figures. All right, Mandy and Deline and Celelo, if you don't have access to your full IFRS template, that is okay. Please leverage on the knowledge that we're sharing. It will apply to your IFRS for SME. We can work out an IFRS for SME file. I don't promise anything, but we'll make our best to create a file for you with the different recons so that we can share it with you. So I'm going to note that down and make sure that we do share a file IFRS for SME, the financial statements SME, so that you can use it. Okay, just make sure that you leave your email address in the chat box and we'll connect with you. So Layla, for the files that I have shared, make sure that you unzip it, then you open it. Thank you, Memory, for sharing. So Memory is bringing a solution for you, Mandy. So if your revenue still has an undefined difference, it is because you didn't insert uh, the amount under at a point in time to reconcile. So that's an advice from Memory. If you want to insert it, please do so. Guys, if you're done with the tax paid note, I trust that you've been able to do it on your side. Alternatively, if not, of course, you can shout and let me know. Before we move to the related party, are going to keep the related party component for the next part of the session. Please ensure that you've downloaded the Caseware working paper file that I've shared with you. We're going to go for a 10-minute break, and then when we're back, cover related party. Enjoy your break, everybody. Welcome back, everybody. That was a quick break, but I hope that you have been able to grab something to drink or to eat. We are currently looking at the different reconciliations of the different notes that you have in Caseware working paper financial statements. The next part, will be on related parties notes. In Caseware working papers, you have two options for your related parties: the default note option or the link to Excel. By default, your related party note is going to be in blue. You can either use the document map to navigate to your related parties note. You can also press on Ctrl F on your keyboard, type related parties to locate your related parties note. A kind reminder to those of you who were in the session since day one, and for those of you who are new, if the note is appearing in blue, it means it's not printing. The N hash next to it also indicates that it is not yet printing. So to turn it on, you're going to right-click over the note and turn it on. You will see the little trident next to your related party note. This helps you to select whether you want the default note to print or whether you want to link it to an Excel. The default note will be to have the note with a tabular format. The related parties linked to Excel will allow you to insert your different movements for related parties on an Excel that will appear on your financial statements. I'm going to present to you a series of slides. If we have time, of course, we'll fill it together. Alternatively, you can always refer back to that slide for your reference. First of all, let's turn on your related parties note. So you right-click over the note and then you select the on option. So Faniel, so you want me to repeat again? So I'm not sure what you want me to repeat. Is it the part of alternate content? I will cover that just now. It was just an introduction. I will say that you can activate different types of content, either the default note on your financial statements, or you could use the option to link the note to an Excel. The Excel has already been created by Caseware. It's on your document manager. I'll show you where to find it. I will also present a series of slides. I will not be doing it with you. You can always refer back to the recordings if ever you want to do it with us. Okay. To turn on your related parties note, first of all, locate it. You can use Ctrl F or you can use your document map and right-click to turn the note on. When the note is turned on, that's the default one. I have not yet changed to use the Excel one. Let's focus on the default note. All the cells that appear under the default note will be in yellow. It means it is editable, that you can edit those line items. Can be the headers, it can be the different line items. Please note as well that you can insert rows. If you right-click over a row. Let's say if I right click over ABC, I can go to the row menu, insert row, and you've got different options. You can insert a row linked to a map. So you will be inserting a row linked to a map if you have a mapping number with several account numbers in there. You just want to group everything. You can use the link map option. You also have the option to link to accounts. The beauty of linking to account or map number will be when you roll forward your file. The figures for the current year are going to move to the prior year column. You will not need to manually type in your information. On the other side, if you decide to insert an input row, the input will expect that you manually type in the values for your related party balances or transactions. And next year, the expectation will be that you will do the same thing, that you're going to type in the values. So think well, when you're doing your related party balances note, think whether you have an account number that you can link a row or a mapping, or if it's not practicable, you can then use the input row options, which is the default. If alternatively, another way, if you don't like the right-clicking menu, you can also make sure, first of all, you place your cursor on a row and then use Super Insert. That should be your best friend. The Super Insert button has the option to insert multiple rows. So on the other hand, the right click will insert only one row. If you use Super Insert Table Rows, it will open your Insert Rows dialog box and you can select the row type. It can be a heading row, an input row. Remember, input row is going to be manually inserted, link to map, negative link to map, link to account, or any other type of rows. You can also select the number of rows that you want to insert on your table. The default is 1, but you can insert by batch. You can insert by batch of 5 if you want. The row position, you can also decide where to place the row above to the cell that you've clicked on or below the cell that you clicked on. Now, we have inserted in that example, I think we're going to do it together just to make sure that you guys are comfortable. I'm going to do it with you. We have inserted 2 rows which are linked to account numbers. These are loan accounts due to owed by related parties, Harper and Larry Attic Trust. So we can do it together. The objective is to achieve this, to have the loan accounts, and also below bottom of your screen, that's an example of my screen actually. That's the example of a manual row where I have inserted manually the different values. So let's please try to do that together. I'm going to escape that screen now and show you on my financial statements how do I insert the row linked to account numbers. Okay, so first of all, let me escape, then go to my financial statements. So remember, you can use Control F or you can use your document map. I actually prefer to use my document map to jump to my related parties. If you have been able to successfully download your wrap-up manufacturing and open it, you will know that I have already changed my notes from the default one to the Excel one. So I'm going to change it again. Just for illustration purposes, I'm going to click on the alternate content button, which is found next to my note name, related parties. Let's give it a few moments. It is going to execute script. Bottom left of my screen, it says executing script. So you need to wait for the script to execute before you can change anything. Let's give it a few moments to do that. And I'm going to select my default node. That's the first one on this window, which says related default node for related parties, and click on select. It will prompt you. Inserting alternate content from library will override existing customization made to this node. Are you sure you wish to continue? Yes or no? Yes, I want to change it from the Excel to the default one. Once again, it is going to execute script. Please give it a few moments for the script to be executed. If on your side, you have already the default node, try to insert these two line items. I'm going to leave my financial statements to execute. Try to insert those two line items under related party balances for loan account with S. Harper and Larry Attic Trust. Insert a row or insert two rows actually linked to account numbers. I'm going to leave that open for a few moments, go through any questions that require my attention. I've seen your question, Yusuf, in terms of the mapping of current tax liability and current deferred tax movement. I will come to your question just after the related party node recon. Okay, I'm going to escape that screen and check out what's going on my financial statements. My note is now ready. What I need to do is look for my related party balances, which is currently turned off. Right click to turn it on. Remember, if it is in blue, it means it doesn't print. Then I would like us to insert two rows linked to account number just after ABC Proprietary Limited. Because we want to insert two rows, I'm not going to select row, insert row, because this is only one row. I'd like us to use the super insert button, table rows. You've got different row types. As per the instructions, we want to link to account numbers because we've got account numbers for the loan accounts. we want to insert 2 rows below ABC Proprietary Limited. Because my cursor was on ABC, I'm able to select the below option. Press on OK. And here we go. On the left-hand side of your screen, you've got options to either type in your account numbers, or you can also press on the drop-down button that allow you to preview the different account numbers that you have in your engagement file. So if I click on the drop down, I scroll down a little bit, let's scroll. We want to find Harper loan account 5400002. I'm going to select that one. And what will happen? The name and also the values are going to pull to this particular line item. To get to the next account number, you can either talk to your clients and ask them about what should appear here. Alternatively, remember, you can always go back to your Caseware working paper, go to your engagement working papers, lead sheets and working papers, and go to your related party sections, or will it be under loans to or from shareholders, from group companies, for example, and take notes. I don't have anything here, but you can use your lead sheets to take note of any loan details that you've mapped to your financial statements. I don't have anything here, but of course you will be asking all of that to your client. You can also type in, so I'm going to type in 5400/005. This is the loan account for Larry Attic Trust that we've mapped to the loan accounts portion. When you roll forward your engagement file, what will happen? The balance for the current year is going to move to the prior year area, prior year column. Alternatively, if you insert manually the amount, so what was the amount? Okay, quickly inserting the amounts there. We're going to assume that's the amount here. These are different from the ones that we've pulled from your trial balance based on account number. These are more editable. The expectation will be next year. You'll need to type in again the different values. Let's also insert for last year. So we've got a very good question from Jason. The question is, what happens when the loan account consists of multiple line items? For example, a shareholder's loan account has 5 to 10 line items that the loan consists of. How do you link it then? So Jason, there are different ways to proceed. So if, for example, let's take the example of loan account shareholder S. Harper. If this is one account number with multiple line items within it that you did not map, you'll need, recommendation will be to do it manually, to insert your rows using the input row option. Alternatively, you can use the technology in Caseware to raise a journal entry and reclassify. You can use the reclassifying option to reclassify from one main account to different sub-accounts. So it really all depends on you if you want to create sub-accounts for these different line items the loan consists of. The best solution will be to ensure that each line item has an account number and you can then use them. Okay. A polite reminder as well to everybody, you can also right-click, go to properties for your name. Let's say loan account as Harper and change it to, for example, as Harper. Right-click properties, select the other, and you can press change the name, and it will be updated accordingly. Okay. The next item we need to cover now will be, that was the editing of the note, will be, okay, to go to the properties, right-click properties, and then show or hide the table totals. Usually, we've got clients requesting us in the related party note to add the totals and subtotals. To activate it easily, right-click properties. On the top part of your properties menu, you can select the show. The default is hidden, so you can select the show option and your table totals will be displayed. So you can try it on your side as well. You're welcome, Jason. You can try it, right-click properties, select display options on the top part of your properties menu, select the show option. And this is just a print preview showing you how the end result will be if you have decided to print. I'm showing you that print preview just to show you, remember, we had some spaces in the editing mode for your account numbers. You don't need to worry about that. These are in blue, it will not print. Your end product will be nicely aligned. Let us take care of that one. I'm conscious of time, guys. We've got 20 more minutes to go through your related party note linked to an Excel. So I'm going to go slowly, but of course you can try it on your side. Feel free to ask your questions. First of all, to change the format from default note to link to Excel, you are going to scroll back to your related party note next to the number and click on the icon, like the trident icon, not too sure what that icon is called, the alternate content icon, to open your alternate content dialog box. Then you will click on the radio button, related parties linked to Excel. You must click on it to be able to link your Excel to your engagement, to your related parties note. There is the preview content that will appear as usual, and you know the drill. To insert the layout, you will then click on the select button. You will get the warning. We did get it when we changed from Excel to the default note. Remember, just now. So you'll get it again if you're changing from default to Excel, that anything that you have created will be overwritten. Any customizers will be overwritten. Are you sure you wish to continue? That warning indicates to you those 2 line items we inserted for Harper. These are going to disappear, and if ever you want to go back, you need to create it again. So that's why you're asked whether you are sure if you wish to continue. We're going to say yes. When you click on yes, this is what you're going to see. Some instructions appearing in blue just below your related parties note. First of all, what we need to do is select the Excel document we need to link to the note. The default is 850.11. That's the document number that you'll see on your document manager. If you're curious, you can go back and check out the document. Control F, find the document 850.11. It will be found under your folder 850 other disclosures, 850 related parties. That's the folder into which you've got your Excel spreadsheet for related parties worksheets. When you open the Excel, the first tab, which is the instructions tab, is extremely important. We highly advise you to read through the instructions. That's gonna help you complete the document. So, and you also have on the instructions page the different the different description of the different categories that you have on the Excel and on your financial statements. Also explain to you how to fill in the different tabs that you have on the Excel. So step number 1 will be to read the instruction. Step number 2 will be to go to the index tab. So that's the index tab. That's the next step that you should do. This index page will help you track the progress of the different related parties sheets that you have onto that Excel. You're recommended to insert your client name and the current year in the highlighted blocks. And these are going to pull through to the rest of your Excel. In the example on my screen, I have used Caseware Connector to fill in the information, but you can also do that manually. Using Connector is much better because if you're using that Excel on another engagement file, it will pull the information of your other engagement file. So we have on the top of the index in the highlighted box, wrap-up manufacturing, 30th of April 2023. The step number 3 on the index tab itself will be to select the relevant section to jump to the relevant tab. So for example, let's stay in our concept of loan to or from related parties. To jump to the Excel or to the tab, you can select this tab, 712021. This will allow you to jump to the tab loans to or from related parties. I want to highlight your attention on the fact that, first of all, on the top of your screen, you have the name of your engagement file. This is because on the index page, you have correctly inserted the name of your engagement. If you didn't, it would have appeared here as blank. Also, note that on the top of your screen, it is going to be in white. You have different cells in white. They are non-editable. You cannot edit it. Those areas in yellows will be those areas that you can edit. The beauty of having that Excel spreadsheet will be that you can share the Excel with your clients, ask them to fill in the data in terms of the loans to or from related parties, and then when you get back the data, you simply paste the Excel on Caseware working paper, making sure, of course, that the reference number is as per the original reference. What was the reference number? 850.11. So that reference number should remain so that back on your note, you can then bring in that 850.11. Okay. So let me go back to this tab. So reminder, you will be able to insert rows. You won't be able to insert columns. These are protected cells, protected columns, but you can insert as many notes as you want. So maybe, Jason, if that can help you, that's an alternative. If your client has only one account number with multiple of loans in it, you can share this Excel with them and say, hey, Mr. Client, kindly fill in all your details so that you will have the information pooling onto your Caseware. Your client will also be happy to have all the list of his different loan items nicely listed as he wishes to be listed. As you insert your different line items on the Excel spreadsheet, what will happen will be on case view financial statements, you need to select the refresh button. That will be that Excel button next to your optimize that you need to select to refresh the Excel figures. This is what will pull to your financial statements. I did not mention, but one thing that you need to also make sure to remember, you have to keep the format. You can't change it, but you have to keep it the same as the Excel. You shouldn't be changing the format of the Excel because it is pulling to the different sections on your financial statements. For the current year, you will only be for the current year. If you should follow my cursor on the Excel spreadsheet, you can only fill in your current year data. So for the second year, on the other hand, if you roll forward, it's going to pull it to the prior year column. But usually for the first time you're preparing financial statements in Caseware, you'll need to fill it in manually on this prior year column. So as you can see here, there's a little red dot indicating that I have inserted my prior year balances. It's assigned financial statements, so I'm just gonna click on and insert the values as per the signed IFRS. Now, some quick tips. We recommend that you mark these different sections as complete on the Excel so that if you are the manager in the room, you can also track the status. Has the team been able to complete the balances to or from related parties? The status option helps you to select the different progress. Note as well, so if I open the Excel just to show you, you can easily, okay, let me show you. That is going to take us a few seconds to show you. Other disclosures, related parties, 850.11. Okay. As you can see, your different, I've already inserted for you some values. If you should follow my cursor, bottom left of my screen, you can move to the different tabs on your Excel spreadsheet. However, you'll know that you've got a lot of tabs. To jump easily to the different tabs, you can right-click just in between the arrow buttons, right-click, and then scroll to the different sections that you need. So for example, I want to go to the index section, press on index, press on OK, and this is where I will see all the different sections I'm currently working on. Right-click and jump to the different sections. Guys, I really prefer that instead of scrolling and looking for the tabs. It can take you time. Okay. That was a quick tip in terms of how to navigate faster and why you should mark your different Excels as complete. As soon as you're done with all the different steps, that is inserting your values, refreshing your financial statement case view document, you can preview your financial statements, and that's what it is going to appear. For example, your related party transactions and balances, the information are pulling from your Excel. This is how it will appear. It is a little bit different from your, it is different from the default mode. It's for you to select the one which is applicable to your clients or not. And you can also use those slides I've shared with you. You can also test it on your side and select the appropriate format for your related party note. That's how you are going to do the reconciliations. That being said, that's the last part of my intervention in terms of reconciliation of notes. I'm going to suggest that we take another 10 minutes break. It's going to be a short break, but please be back on time. We're excited to have Angela with us today, who's going to give us a heads up of how to reconcile your cash flow statement. So guys, please enjoy your 10 minutes break. See you just now. Thank you. We're back on break. I'm just quickly fixing my to show you the video for the break, and we're back for the little video just now.
Testing. Hello and welcome back, everybody. We're just quickly dealing with a technical difficulty. Please just put in the chat if you can see a slide with cash flow worksheet. Just say yes in the chat, then we know it's clear. If somebody can just post if they are able to see a cash flow worksheet slide on your side. All right, it seems good. Thank you then. Good morning, everybody. My name is Angela, and I lost a bet with Sandrine, so I have to present the cash flow worksheet this morning to you. I thought I'd switch on my camera because I haven't introduced myself yet, but now that you have seen that I'm not a robot, I'm going to switch off and just carry on with the presentation in audio. Okay, so what we're going to be speaking about this morning is the cash flow worksheet. And I just want to get all my ducks in a row here quickly. So what the cash flow worksheet or this discussion is all about, it's not going to be an in-depth look at us going through an entire cash flow statement in terms of looking at examples. I really want to paint a picture for you on how the cash flow worksheet and the cash flow statement integrate with each other. So what am I actually talking about? What Caseware have done is, it's been about just over a year now, we've introduced a cash flow worksheet. And the whole reason behind this is that it's a tool for you that you will use to create your cash flow statement. The reason for it is, if you look in IAS 7, or from an SME's perspective in section 7 of the IFRS for SME standard, the standard tells us that investing and financing transactions that do not require the use of cash or cash equivalents should be excluded from a statement of cash flows. Now, if you think back, traditionally, often the amount that is shown on a cash flow statement is opening balance minus closing balance of specific line items in the balance sheet. Now, you will agree that that's a bit far-fetched to just assume that that opening less closing balance movement is purely cash flow in nature. So what we have to do is we have to strip out the non-cash component somehow. So in order to do this, we have created a worksheet tool which would be used by you, sorry about that, which would be used by you to remove the non-cash items. So we've created an integrated cash flow worksheet. So what we mean by integrated is that the worksheet actually goes into the financial statements, to the various notes in the financial statements, and it goes to the trial balance, and it pulls whatever data it can to be able to calculate the cash flow for the period. And then the second level integration is that it then pushes this information back to the actual cash flow statement, which is in your financial statements. And so the purpose is that it is a tool to remove the non-cash flow items in a visible and auditable manner. Because depending on how far you are in your career, you may get to a place where you see an amount on your cash flow statement, but you don't know how that actually got to that or how it compares to the movement in the balance sheet. And so the point of this is so that you would be able to go into this tool and to be able to exactly see what has been taken out and to result in only the specific cash flow items remaining. Okay, So before we start, I will do a demonstration with you. There are certain items which are very important to take note of. I've said it's fully integrated, which means that the statement of cash flows is not possible without it. So you've learned by now about the yellow and the white cells. When we go into the cash flow statement, you will actually see that for your current period, there are only white cells. So you're not going to get it right to type the numbers in there. You have to go through the cash flow worksheet to be able to complete your cash flow statement. So the next slide is an explanation of what you're going to see when we go and look at the cash flow worksheet and how it connects to the actual cash flow statement in the financials. So first of all, it is document 01.70, which you will find on the document manager in the financial statement preparation section of your document manager. You can also access it directly from the cash flow statement when we are in the case view document in the financial statements. It consists of 5 components. The first component is called the cash flow worksheet or the non-cash movements working paper. This document you'll see is set up as a statement of financial position, or for those of us who are old school, as a balance sheet. It lists literally the assets, equity and liability components line by line that you see on your balance sheet. And in this part of the worksheet, you're going to strip out all of the non-cash movements. Don't panic, I will demonstrate or show you how it looks in a moment. From here,
I'm sorry to interrupt you, Angela.
Please.
I'm just having a little issue. We're just having a little issue with displaying your screen. I'm going to quickly switch back to mine. Sorry, everybody. We're just gonna change presenter in a few moments and switch back to mine to show my screen and go back to your screen just now. Once again, apologies for that. I'll just quickly also quickly change the screen and go back to showing my screen. And on your side, Ninka, you can just let us know if that is better.
Yes, it looks like it's working on my side now.
Alrighty, so now I'm going to change presenter back to you, Angela. Thank you for your time.
Let's see if I can get that right. Give it a moment. All right, Ninka, do you see my screen?
And just give me like 30 seconds. It looks like it's coming through. The clock is gone. So yes, I can see your slide. You can continue. Thanks all.
All right. Shall I start from this slide again? I think so. We hadn't got far in it, so I'm just going to then start again. What I had said was that our cash flow worksheet is document 0170 on your document manager in the financial statements preparation section of the document manager. You can also access it directly through the financial statements in the cash flow statement, which is the way that we will access it this morning. Then my next step was just to show you that there are 5 components in the cash flow worksheet. My presentation so far only has the first part shown for you. It is called the cash flow worksheet or the non-cash movements working paper. This is in a statement of financial position or balance sheet format, meaning that when we go and look at it, you will see that it lists all of your assets, equity and liability line items, and then is set up in a manner that you would strip out all the non-cash movements. So the way it looks is you have an opening balance for each balance sheet line item, then you're going to take out all your non-cash items, subtract the closing balance, and it's a simple equation. It equals to the cash flow per balance sheet line item. That is in the first part of the cash flow worksheet document. The next portions you will see are operating, investing, and financing activities work papers. These three are where the output from the previous section, in other words, the pure cash flows per balance sheet line item, are then fed into the operating, investing and financing activities working papers. The reason for this is so that we can properly allocate the cash movements. So for example, in the first part of our worksheet, we would have calculated the cash only movement on property, plant and equipment. That full cash movement is then fed into the investing activities work paper, where it is analysed by into its nature as the portion which is for purchases of property, plant and equipment or proceeds from disposals. And that process happens with all of the line items until they are properly allocated in terms of the nature of the cash flow. Then the last portion of the cash flow worksheet is a test of cash flow. You want this to be 0, and then you know that your cash flow statement is in balance. And then how does this integration work? What happens is that the results of the operating, investing and financing activities working papers pulls through to the annual financial statements, into the statement of cash flows and the related notes. And this is the only way that you can get numbers onto your statements of cash flows and those notes. So what is the approach that we're going to follow? It's very important to make sure that your mapping is correct. So I think this is probably one of the most important places to make sure that you haven't lazily mapped. An example is if you have a gain or loss on a revaluation, perhaps a valuation allowance, or a profit or loss on disposal, if you don't correctly map that to the gains and losses on disposals or to the fair value adjustments, if you just put it into a random expense account, it's not going to pull through to the correct place on the cash flow statement. So mapping is important. Secondly, before you attempt your cash flow worksheet, you should complete all your other notes and reconciliations. This is because the cash flow worksheet pulls data from these other sources in the financial statements to try and obtain as many non-cash movements as it can. So these are the two sources which it uses. It's either mapping and it's your other reconciliations which the worksheet uses to draw down on non-cash movements. And then of course, we cannot identify all non-cash movements. So the ones which we were not able to identify in the software, you are going to have to type them in manually to the cash flow worksheet. The last step in completing your cash flow is going to be to review the allocations. This just means in the investing, financing and operating activities sections, you are going to just take a look and see that you are happy with the allocations that we have been made, or if you just need to allocate it slightly differently. Again, I will show you what I mean in the demonstration. With that being said, let us go and take a look at a demonstration of this. I assume Sandrine is keeping an eye on questions if there's anything absolutely urgent, but otherwise we can take questions at the end. I just want to point out to you that, that this is not we're going to have another session, I think in May or June, and Lenka will also clear up, where we're actually going to go through a case study with you, and we're going to look at specific transactions. The objective of today is just for you to see how it fits together. All right, so just follow with me then on my example. I have got the wrap-up manufacturing file, which Sandrine has been working on with you. And so these numbers should make sense to you. What I've done is I've mapped correctly. I have balanced my financial statements. So I have used the little, the rounding tool to make sure that the rounding differences are gone. And I have completed my notes. I will just show you an example. Property, plant and equipment. I have completed my recon. So I'm happy that my recons are done, my mapping is correct, and I am ready to look at the cash flow. So I'm going to jump to the cash flow statement, And I just want to show you on my balance check that you will see that my statement of cash flows is out of balance. And the reason for this is because at this point, there is nothing yet in, look at my current year, in the statement of cash flows. And this is because it is not yet connected to the cash flow worksheet. So we have to actually activate it. Before I do that, I want to talk about the comparative column. My file comparative is 2022. When I first opened this file, and what it may look like still on your side, I'm not sure how far you've gone, this for the first year only of preparation would all be blank. So these would just be yellow cells and your prior year would be out of balance. What you need to do for the first year only is take your signed off financial statements of 2022 and just type the comparative figures in until that out of balance indicator clears. The reason we did this is because there is only a cash flow worksheet for the current year in each file. So we do not have a prior cash flow worksheet in this file. Reason being, it's quite large and would take a lot of space unnecessarily. If you've signed it off last year, it's not necessary to have the worksheet in your current year file. So for the first year of preparation, you'll type in the values. Are you going to have to do it again next year? No, not at all, because when you finished with 2023 and you do your roll forward, all of the 2023 values are going to roll forward into the prior column. So it's only for the first year that you prepare a set of financial statements that you would have to type in the comparative. Okay, having said that, let's now move on. So our first step is what we're going to do. Perhaps I should first actually just quickly show you the statement of cash flows. So you're familiar with it. I have chosen the direct method. I will show you the indirect method in a while. We have our cash flows from operating activities, followed by our investing activities with all the various types of investing activity movements on our assets, and followed then by our cash flows from financing activities, all the movements on our loans and equity, which were cash flows. Okay, so now how do we get values in here? I'm so glad you're asking me so many questions. Let's get going. So I want you to keep an eye on the balance check. And what we're going to do is we're going to click on the refresh button. It's presented at the cash flow statement or also in the balance check. So click on refresh and it's going to go and take a look at what the cash flow worksheet does in the background. While that is executing script, this just makes me think of, I don't know how many of you have perhaps got Checkers Extra Savings, but I love being at the till and swiping that card at the end and watching the numbers go down like magic, which is what has happened here. So magically, look at that. A perfectly, except for R1, perfectly balanced cash flow statement. Is there any applause from the room? Okay, so now let's take a look at this thing. So all of our detail is here and you cannot change it by typing in on this page. We're going to have to go into the cash flow worksheet. So let's go. We're going to click on cash flow worksheet. It's going to take us to that document 0170. Give it just a moment to load. And at any point in time, if you make changes to your financial statements or if you re-import a trial balance, if there were changes, you're just going to click on refresh to make sure that all that new data pulls through to the cash flow worksheet and then back to the financial statements. Okay, so just so you can see, it's on the bottom of my tab. My financial statements are on the left and my cash flow worksheet on the right. Sorry, now I'm jumping. So remember my slide, I said to you that there are 5 components to the cash flow worksheet. I will just run through them on the document map on the left. First of all, it's the cash flow worksheet. Company, because I'm in company mode. If I've activated a consolidation, there would be a group section at the bottom, but don't worry about that now. So this cash flow worksheet part is literally where I strip out the non-cash movements, followed by my operating, investing, and financing activities working papers, which pull through only the cash flow numbers from the main worksheet. and then followed by a test of cash flow, which will take all of our movements. It'll take our cash at the beginning of the year. If there was a foreign exchange movement on cash, it would take it into account here, less our closing cash and cash equivalents, and this should be 0. Now we are out of balance by 1. We'll deal with that now. Let's go look at the first part of the worksheet. There is a lot of grey text. This doesn't mean it's boring, it means it's guidance. Please read through this text. It's going to help you to understand how the work paper works. And it's a lot of interesting reading if you're battling to fall asleep at night. Right, here is our statement of financial position layout, which I mentioned. Here we have all of our assets listed down the side. I will just scroll down slowly so you can see all of our assets. Obviously, it excludes cash and cash equivalents because that is the number we are working to. Then we follow by our equity and liabilities. So we have our share capital, reserves, non-controlling interest, retained income, all our equity items. You will notice that there is one line item for each balance sheet item, except when we come here to the retained income. What we're doing with retained income is, of course, the movement in retained income from your opening to your closing balance is essentially net profit, right? And we know that in our cash flow from operating activities, we've got to show a whole lot of stuff. We start with our net profit, and then we take out all those non-cash movements. So we thought, instead of squashing all of those non-cash movements into one little cell here, we decided to split it out. So this is why, so for retained income, instead of just one line item, we've given you a whole lot. That's the reason for the difference. So it's all of our non-cash items which are in profit or loss. So they will all pull through automatically here. This all comes from the from mapping at this point. Then we also move out, think about how your cash flow works. All our items which are presented separately, you know, things like interest, dividends, finance costs, taxation, and so on. So these are all going to come out. They come out in this column because they're going to be separately disclosed. So up to this point here where you see discontinued operations, from here all the way back up to retained earning income and including it, that's actually one line item, being the movement in retained income, or if you will, the net profit, cash or non-cash adjustment. Okay. After this, we've got our items separately disclosed, which is just our interest, dividends, finance cost, tax, which we pulled out of the retained income line, and we say, these we must show separately, so we're just popping them back underneath. And then are all our liabilities from our balance sheet to give us a total of our equity and liabilities. So what happens with all of these asset and liability lines? We start off with an opening balance. I'm going to go back up to assets. We start off with our opening balance. Then all of these columns are movements or non-cash movements which took place in this account for the year. Then we say less our closing balance, and logically our answer is either a net cash inflow or outflow for that line item. Okay, so we do this for every single line. What the software does is every time it can automate an amount either from mapping or from other places in your financial statements like the PPE recon, it drops them in here itself. If there are additional non-cash movements, you're going to type them in. Okay, so that you can land up with a net cash inflow or outflow per balance. I also just want to mention, lest I forget, let's say you've got 3 or 4 non-cash movements that you would have typed into this cell. And you're not going to see what they are because it might be 100 plus 15 plus 60, whatever it is. And these were your various movements. And you're left with just one number. What you would then do, just excuse the ridiculousness of the numbers I've chosen, is my suggestion is that you then go and you create a note where you would explain what that amount is made up of. And then you can use this to keep complete track of exactly what you've done here. Now, this could have been for a prize, the red dot appeared. So if you see a red dot appearing when you've typed into this worksheet, it just means that there's actually an automation behind this. you might have more that you want to add than the automation, so you will type in the extra, but otherwise you can override to just go back to the existing amount that was calculated here. Okay, so now let's take a look. So all of our assets, we add up to our total asset movement, all of our equity and liabilities, I'm just scrolling down, we get to our movement in equity and liabilities, and then we have what I want to show you is a movement row. This now takes the opening balance of all of our assets and liabilities and puts them here. It takes the total of all of the movement, the non-cash movement columns, and puts them together. It then takes the closing balance of all our assets and liabilities and gives us a total cash-only movement on our assets and liabilities. And this should be the same as the movement in our cash and cash equivalents. In this case, there is a one, we're out by one, and the reason here would be attributable to rounding. So you will recall where you would have rounded your financial statements and you would have rounded against trade and other payables most likely. I have, so what I will do here is I'll say it was a rounding. You can clearly see it arose on the opening balance. So I'm just going to go into my worksheet and you can pick a place where you're comfortable to put it. These columns don't pull to anywhere, they are just there for your workings. And I'm going to say that rounding difference of 1 was as a result of trade and other payables. And now my cash flow is in balance. If I go to the test of cash flow, it's fully in balance. Right. So at this point, I would like to just show you one small transaction, that's all, because we're going to do more in the main session in May or June. So what I have done, if I jump to my journal entries, is I've decided I want to create an additional non-cash movement for you. So our company sells, I'm going to say they sell machinery, and we actually need this machinery in our business. So we are going to credit the inventory or the stock on hand account with an amount of 100,000, and we're going to add it to plant and machinery and property, plant and equipment. Do you agree that property, plant and equipment is going to increase and inventory is going to decrease? I think you're all nodding. Do you agree that this is not a cash transaction? I mean, should this increase in PPE be shown as additions or purchases of property, plant and equipment on the cash flow? Of course not. So let's see what would happen. So I'm just going to go and process this journal entry, and I'm going to go to our financial statements and just see. So remember I told you that you have to make sure that you finish all your recons. So I have added a movement to PP&E. So I need to just go back to my financial statements and update. I'm going to go to the balance sheet. I'm going to go to my property, plant and equipment note. And I'm going to go to the recon. And as expected, we are out of balance by an extra 100,000 because I said we increased, we received additional assets by a transfer from inventory. So go and put that in the transfer column, just making sure my alignment's right. So now I've completed my reconciliation of property, plant and equipment. It's in balance. And I just have made a change to my financial statement. So I need to click on the refresh button to make sure that my cash flow worksheet takes note of the change. And when you refresh, it automatically goes to the worksheet. I just want to show you in the financial statements that, do you see now our cash flow statement is no longer in balance? And this is now because there is a non-cash item that we haven't fully taken account of. So let's go look in the cash flow worksheet. Do you see that the worksheet has automatically, in the property, plant and equipment line, it's gone to the recon and it's taken the 100,000 from the reconciliation. It's identified that it cannot be a cash flow item and it has put it in here. Important to note when you fill in this document is you must put your cash flow transactions in the same direction that they affect the line that you're dealing with. So we increased PPE, so it goes in as a positive 100,000. And this would then reduce the amount of the net cash movement because it was a non-cash movement. But of course, if we scroll all the way to the bottom, our test of cash flow is out of balance by 100,000. And that means, we haven't put the other side of the transaction through. For every debit, there's a credit. So what other account was affected by the 100,000? It was inventories. But now why hasn't the software gone and put the 100,000 here automatically? Because there isn't an inventory reconciliation to pull through from. So you're simply going to go and you're going to put it in the direction that it affected inventories. It was a reduction of 100,000. And you should be back in balance. Okay, so that was just to show you all of what the process you would follow to get to your pure cash flow movements. Now what we're going to do is we're going to take a look at how the first part of this worksheet, I'm just still in the main cash flow worksheet, how do all of these numbers now pull down into the operating, investing and financing activities work papers. So let's just go in order and let us jump to the operating activities section. And in this part of the cash flow worksheet, there's very little work to do. Most of the work you're going to do here is just a review. So we start off where we've just given you a layout of how we've come to the calculations that we've done. So you're going to see cash flow from operating activities. You see a table here, which has got columns for default cash received from customers, the default cash paid to suppliers and employees. It just means where did we dump each of the income statement items when we calculated net profit. Revenue, we defaulted to cash received from customers. Cost of sales, we default to cash paid to suppliers and employees. This is just so we can calculate these two numbers. Which numbers are they? Let's go to the financial statements. Let's go to the cash flow. If you're in the direct method, you've got these two numbers, cash received from customers, cash paid to suppliers, employees. How do we work this out? That's what the two default columns are for. So I'll go back to the worksheet. And so we go through our income statement, putting every income statement item into one of these two columns. Then there's another default column, which is just for anything else. We'll show you how that works in the investing and financing. And then there's a reclassification column, which is not yet going to be used. This is just if you are not happy with where we've allocated something and you want to reclassify it, let's say from operating to investing activities, you'll use this column. I'll demonstrate when we get there. And then finally, everything adds up to the statement of cash flows column, which is what is used to populate the cash flow statement. Okay, so this is just a repeat of the income statement, split it up between paid received from customers, paid to suppliers and employees, and the total. So if you go back to your income statement, you will see that this amount is the net loss or profit before taxation. Okay, simple. You've learned this all before. Then we go on and we're going to say, okay, now we start off with our net profit or loss before tax, our adjustments for non-cash items, which are included in the above. And so we just start stripping out what shouldn't be, what isn't cash in nature. So depreciation, amortization, and impairments comes out. We take it out of this column because we put it in there in the first place with all of our operating expenses. So we just take it out of the same column that we originally put it in. And all of the non-cash items will come out. These are all blue because there were none mapped to them. Remember how I said to you it's important to map correctly? It's things like reclassifications, fair value adjustments, share-based payments, and so forth. And then the few cells that are yellow would be if we have allocated these other non-cash items included in profit or loss. Let me give you the trail there quickly. Sorry, this might be important. If we go to our main section again, remember I said to you the retained income portion at the bottom, which is very much a mirror of what we were discussing in our operating activities. Here we take out of retained income our non-cash items included in profit or loss. What if there was a random type of income or expense, which is non-cash flow in nature, but Caseware couldn't have known what it was? It was a random thing. Let's say you received a donation of property, plants and equipment of 150,000 Rand. And so it wasn't a cash, sorry, not, yeah, it was an asset worth, let's say 150,000. So you recognized it as an other income of 150,000. It would have been a credit. And you would have then put the other side as a non-cash movement to PPE. So now what happens is this is going to come out of net profit. So here's the total net profit, and the amount would come out here, this 150,000. I'm obviously going to be out of balance because this is not a real transaction here. If we go to our operating activities, that amount has pulled through here. We've defaulted it to the cash paid to suppliers and employees column. But you will say, no, that was an income. It shouldn't have been there. It would have been here because it would have then been included in, do you agree, other income? I just can't see my other income line now. It's here somewhere. It would have been included in this column. So all you're going to do is you would say, no, it actually belongs here, and you will just move it. So this is what I mean by review. You're going to just come through and just review that you're happy with the classification of the items. In the places where you see a yellow cell, it's where a reclassification could be possible. I want to get rid of this guy because it's going to confuse us just now when we're out of balance. Okay, so back to operating activities. I hope I'm not going too fast. So yes, so we moved down in our operating activities. We've taken out all our non-cash items. But again, like I said, there's nothing for you to do here. You've noticed that apart from the 100,000 adjustment that I put through in inventories, we've done no work. Everything is automated. I'm just checking that I'm happy with where it is. Here we take out our items which are presented separately. So these are our interest, our finance charges coming out, and they come out from where I had originally put them in. Our changes in working capital. So our inventories movement would come through to the cash paid to suppliers and employees column. Receivables would obviously go to customers, and so on. Where did this come from? Remember the number 3117404. It's our movement in inventories, excluding the 100,000 non-cash. So there it is. Same happens with trade receivables and trade payables. All pulls the cash, or the movement excluding the non-cash component, comes down into our operating activities in our working capital, changes in working capital section. It totals to the statement of cash flow column, and this is the amounts which will then feed through to the note, through the cash generated from operations note. And finally, we now get a total of all of the above. So our cash generated from the operations, you can see exactly, so in the past you might have just landed up with this number, amount of 107 million and not known what it is made up of. So in this worksheet, you can see exactly what has been included in these two numbers. And again, I just want to show you, they are found on your cash flow statement. There they are, the 107 million less the 110 to give you your cash generated from operations. This is where it obtained the numbers. Okay, the next part is, if you think, so obviously this part of the cash flow worksheet mirrors the financial statements or the cash flow statement. So what's next is our interest, dividends, taxation, basically, which is always defaulted to operating activities. So our interest income pulled from the main worksheet, let me just show you where, in just this example. So it's 116286. It will have got it from, I'm going down there to the retained income. It's an item presented separately. Interest income are 166,286. That is now taken to my operating activities. And again, you're just reviewing. I'm still doing no work. I'm just looking at this. But you might say to me, you know what, Ange, I don't want my interest income in operating activities. I want it in investing activities. So what you then do, now you're going to make use of the reclassification column. We can't change this total amount. We have to retain it because in our first part of our worksheet, we worked out that this is the amount of interest income cash flow. So the worksheet makes it that you can never JIPO it. So let us then go and try and move this to investing activities. So it's 166,286. See if I can remember that. So if I go down to my investing activities, you see there's an interest income line. Now in the default column, there's no amount because it's defaulted to operating. But I'll say I want to show my interest income here. So 166,286, I'm showing it rather in investing activities. And so you don't double count. In this reclassification column, it automatically takes it out of the interest income in operating activities. And of course, if you make a mistake and you accidentally put 266,286, that's the amount that it's going to come out, and then you should be alerted and go, oh, wait a minute, I've made a mistake. There's a minus 100,000 showing here. But in total, your net amount of interest can never change. Right. It was 166,286. So that is your operating activities work paper. Next, the investing and financing activities working paper work the same as each other. So what's going to happen now is if I go to my assets and liabilities sections. So let's look at assets. So we're doing investing. Let us take this property, plants and equipment. We've worked out that the cash movement was 1525297. This is the amount that then gets sent through to the investing activities working paper. This net amount can never change. So what we've also done is for each line item, we've decided what is the most likely cash movement for this type, for this line item on the balance sheet. And we've allocated a default line for each one. So for PP&E, we've said the movement in property, plant and equipment is most likely purchases. Do you agree? You're probably going to buy more assets than you are going to sell them because you're not in the business of trading PPE. So it was defaulted to purchases. But now we've got to figure out what if some of those purchases are actually proceeds from sales? What if there was also sales? Then there is another line for proceeds from sale of property, plant and equipment. Now, the beauty of this worksheet is that Caseware is able to calculate proceeds. So in our example, we just didn't have any sales, but if we did have a disposal, it would have gone and taken the profit or loss on disposal of assets, and it would have taken the disposal's amount in the reconciliation, and it would have calculated a proceeds from disposal and put it here. And then this amount would have deducted against the net movement to give you what the total purchases were. So I'm going to override it just to demonstrate, and let's pretend that there was an amount which automatically came in here of let's make it 850,000 that the system had calculated was a sale of PPE. Do you see that whatever comes into the next line, the equal and opposite deducts against the other components of property, plant and equipment, so that you can never have a net movement which is different from the amount calculated in the main cash flow. So the total of our purchases of this 2.3 million and our sales of 850,000 will always get back to the 1.5 million. Okay. Obviously, this was not a true amount, but I'm going to leave it here just for purposes of our demonstration. And then it goes down line by line through each of the line items which had a value. Now you get to the part where you have to determine if our default made sense. So here we had cash receipts on repayments of loans to shareholders. So let's think about it. This is a loan to a shareholder. It means they owe us money. So obviously, if there was an outflow, it means we advanced the money to them. So this is not the right, if that's the case, this is not the correct default. We just put it here because we figured that it's more common that there would be repayments than that there would be advances. Depends on the nature of repayments, I suppose. So let us now just go and reclassify that and say it was actually an advance. And then what happens is it just moves the amount from repayments to the advanced line, and then that is the correct allocation. Alternatively, it might be that we know, because we're going to have our worksheets in our file somewhere, that actually what happened here is there was a 200,000 Rand that we advanced to shareholders in the beginning of the year. And the system will automatically calculate for you that we advanced in 200,000. We know that the full movement was 134, which means that they paid us back 65,000. So let's assume this is the truth and leave it here as well. And so you're going to go through your investing activities and you're going to go through your financing activities doing the same thing. Let's see here. We've got a repayment of loans from shareholders in financing activities. This looks right. It's an outflow. An outflow is a repayment, so we leave it in this default. Our borrowings is showing us an inflow, so we would go, no, that's not right. An inflow of borrowings was cash received, and we know that we received a 2 million Rand loan from the bank or wherever it was from. Again, the 2 million will now show as what we received during the year on borrowings. We know that the 1138 was the full or the net cash movement, so Caseware calculates that it means that our repayment of borrowings was 861. And I think we've gone through the whole process now, and our cash flow is in balance. Now let's go and see, try and recall some of these numbers. Do they pull through to the financial statement? Oh dear, I think I'm taking too long. So you're going to find that all these values pull through to the financial statements and to the related note. And there's our cash flow from operating note. All the information from the worksheet pulls through here. Then I just want to show you quickly before I hand over to Ninka. If you go into settings and format, you've learned that previously with Sandrine. Now it wants to take a moment to think. You can change to the indirect cash flow if you prefer that layout. And it is going to hopefully be very quick. I've got only about 2 more minutes with you. There we go. And you have a beautiful populated indirect method cash flow statement. Let's just see, it's still busy. Okay, but in our next session, we're going to go and do a proper case study where we'll go through some typical non-cash scenarios, things like dividends and intercompany loans and so on. So there you have it, your indirect cash flow worksheet. All right, thank you very much for listening. I'll just hand back to Ninka.
Thank you so much, Angela, for your presentation. It was indeed super exciting, and I'm sure we're all looking forward for the next session on cash flow. Angela, I'm going to ask you, we've got some questions in the questions area on GoTo, namely from Edgar, who's asking about the repayment of loan. We also have some other questions from Yusuf. So please, if you can maybe type in your answers, that is really going to help. So I hope that you're also here in the room with us, enjoying our webinar so far. And before I hand over to Ninka, our product manager, I want to take a moment to talk about something exciting. And if you've been in our webinar since day one, you know the drill. It's time to win a prize. We all know the power of social media in connecting professionals and sharing valuable insights. That's why we wanted to invite you to join us in spreading the word about this webinar, this Get Ahead webinar. Now, what's the prize and what are you supposed to do? So here's the deal. We would like you to post a personalized message on LinkedIn mentioning our webinar, Get Ahead Audit Intake 2024, you will then be entering to win an amazing prize. We're talking about winning a take-a-lot voucher and, most importantly, the chance to connect with myself, with Angela, and or with Ninka for a 30 to 1 hour personalized session with you. Now, I know what you guys are thinking. Say, hey, Sandrine, what should I write in my post? It's quite simple. Share what you've learned so far. You can mention a key takeaway that resonated with you, or even just express your excitement about the topics we've been covering. I'm sure you've all been excited about your cash flow statements or about a Caseware working paper, leveraging on technology to generate your financial statements. So just be genuine, be creative, most importantly, be yourself. And I think there's more to just sharing the post. It's not about you winning a fantastic prize, but it's also for you to contribute to your community, to our community of financial professionals by spreading valuable knowledge and insights to your network. Just think about the conversations that you're going to spark, the connections that you can make, and also how it can impact your professional life by sharing your thoughts on this webinar. So please, let's get social. Take a moment to craft your personalized post right now or after this session. Don't forget to tag us. Use the official hashtag GetAheadAuditIntake 2024. And remember, every post is an entry into the prize draw. So the moment you share, the more the share, the better you've got chances to win. So I can't wait to see your posts and hear your thoughts. Thank you for being part of our webinar community and looking forward to the winner in the prize draw. Now let's get back into the webinar. We've shared with you a link to our survey. We want to improve our training to make sure that we adapt the training to your needs. Please feel free to, and please do fill out the survey. I'm now going to hand over to Ninka, who is going to take us to the what's next portion. Thank you all. Ninka, over to you.
Thank you, Sandrine, and hello, everybody. I want to first thank you, everybody, for joining us. This is the first time that we're doing this series, and we really had such a good uptake on it and participation in it from questions, from doing the polls, from feedback that we've received from you. So thank you very, very much for that. I also want to say thank you to Sandrine specifically. She's really been engaging with all of you, as I'm sure you will also confirm, and sharing her expertise from the market and from clients. So Sandrine, thank you for all the sessions that you have already done for us. That being said, we're now looking at what is coming up next. And you'll notice that these topics are a bit more specific. They are broader topics, and what we would like to do in sharing these is give a bit of background on the accounting elements in it and then how it is applied in the software. So we're going to take a little bit of a break while the audits are still wrapping up their 2 next sessions. And then we're going to start in May with the first session being the difference between IFRS and SME. This is like, why would you apply the one? How does the templates different? When will you use the one or the other? And then we will also cover in that session retained income and OCI. I did notice there was a question about reserves. So definitely during that session, we will also look at the reserves and how that will influence you. Then we will have another session on the 6th of June, which will be the cash flow. So like Angela has started today with you, she will go in a very in-detailed case study during that session on very specific transactions that we've got questions on, and to give you a practical example of how those will work. The cash flow is very topical from IRBA side, from globally, from the IFRS board side. So really we feel there's it's a quite important document, and therefore we want to spend some specific time on that. And then during that session as well, for the last part of it, we will cover XBRL and how does that fit into the software, when do you have to submit XBRL, how does the integration work with CIPSI, and the content that's going to come out of that. And then we will end off on 20 June with the last session, which will be accounting policies. Again, very topical at the moment, with especially for your IFRS clients, as IS1 have changed. But just in general, why is accounting policies applicable? Most of us are more number people. How is that relevant to the set of financials that you perform? And then we're going to have also during that session a roll forward and an update of the file. And this is a topic that Sandrine has covered already, but we really feel it's very important that you understand the different options that you have there available, working with a firm template, your expectation if you do a file new or you just update the financials, and what's then best suited for your scenario to have the most efficiencies. So these are the sessions that's coming up, and we will then be wrapping up on the 20th of June with the last session. And how it will work going forward is you will receive a mail with the recording links. I know everybody's always asking for the recordings at the end of the audit sessions. So 15 April, after that session, just give us some time to work through those recordings, and then you'll get a mail with a link to all the recordings that was already sent to you, and the last bit of the series then. And in that, you'll also get these dates again, and you will then be booked for the next sessions as well. So nothing really that you have to do from your side. You can, if you want, to block out those dates already, but the mailer will come out with all the information. And I just want to double check. That is everything that there is from me. Thank you again for joining us. Thank you, Angela, for giving us a teaser on the cash flow. And then you'll join myself and Angela going forward for the sessions as we go ahead. Thank you, everybody. Have a lovely day.